Hi guys, so this is MJ Lux and it's part 2 of the November 2021 update. So I will start with the UK, so I plan to speak about that as well. We were kind of 20 minutes. UK is one of the biggest exposures in the portfolio. Aston Martin is actually the biggest. I've been talking about the brand value of Aston Martin being at 5 billion and market cap being below 2 billion. So this is the only company in the world that I can find that's trading below its brand value. This is had a great discussion with one of my investors about it, and actually this is a data point that's not visible in Bloomberg or Reuters or FactSet or any of those tools. So actually not many people know that, and they probably don't look at it that closely, and therefore this is something that we know, but maybe the whole market doesn't know yet. So that this is a consideration in terms of whether people are actually looking at it. We had I don't know if it was HSBC, but a lowered PT, but it's still 2,350. So it's 50% from there. I think 2,800 is reasonable. We have a CFO just leaving the business for personal reasons. So that sent the stock down 7% yesterday. Today we're around equal, but as I said, compare this to Ferrari and see that we're actually getting closer and closer to them, and so I expect this gap to be narrowed. Another great business in the UK I really like is Capita. So they make software and for the government and win a lot of government contracts. Again, okay, it's not as exciting as I don't know, some of the players such as I don't know, Arterix or Square or Sumo or whatnot. But it is a very solid business with very solid contract pipeline, and therefore they should get back closer to what they were trading, and they're trading at a fraction of not even, let's say 25% of what they probably should be trading. So I like that business. I like Sina, which has been very volatile these days. Obviously it's a little bit play on the reopening trade and so on, but box office is very strong. Chinese buyers were buying at 50, so for me this is like the support level where we should never go below. We're trading just around there right now. There's obviously that element to it, but the debt I think can be manageable. And if you look at what happened with AMC in the US, the cinema business here in Europe, and actually Cina has a lot of business in the US as well, and so I'm very positive about those businesses. We have Micro Focus as well, similar story, good tech, good company. The revenue is going down slightly, so I see why, because of that, the share price can go a little bit down. But again, you cannot be disproportionate to some extent. Let's say your revenue goes down 10%. It's fine if the share price goes 20% down, but if your revenue goes down 10% and the stock goes 80% down, that's just not realistic. So I like the UK a lot. Out of the small caps and China, I like the combination of the three because I think these three parts of the market are very undervalued. Obviously US is the most important market, but then people also invest in London. So if when it comes to where people say, okay, the US market is overvalued, it may happen that they may actually start buying UK stocks. And so last November we generated 26.25%, mainly based on that, like National Express and Go Ahead Group, and all those went massively up. Now we have a new COVID variant, so that's not going to happen immediately, but I think it will happen in the near future, and I'm very positive on the UK market because again I buy global businesses mainly, so that derive revenue like Aston Martin. I can remember is 17% generated in the UK. All the rest of the revenue is generated globally, so it's a global business, just happened to be listed in London, and therefore is not so invested. But again, there are billionaires in this world who would be interested in buying that business. So I think that's why it's the biggest position, and I think you cannot go wrong at these prices. The next subject is investing when everything is down. So here, obviously the easiest thing to say is to just be strong, hold, don't realize the loss, and just hold long term. This is the easiest thing to say. It's also close to the truth. So actually, if you hold undervalued businesses, the likelihood of them reverting to the mean, that's how we call it in finance, we can say popping, just going up exponentially is very high. You don't know the timing of that because those parts of the market that are unloved, people don't look at it, so there's not that much liquidity going into it. That's why they don't go up all the time. But it suffices that some big investors start buying the stock because they realize how cheap it is, and then it will go up. So therefore, building these free themes, we're very well positioned for that growth to happen. So the strategy is to buy when things are down. So we went there's a 30% drawdown, which I'm very unhappy about, and I apologize. Obviously, that's not intentional. I think we took much bigger hit than I ever expected. Usually, you never have a drawdown that's bigger than 20%. So the small caps in China and UK have been working against us. But again, there was a study. If you buy the lower performing fund, that's probably the best strategy, because the highest performing fund will probably not replicate the same gain, because the thematic composition of the portfolio will not bring the same return as it did last year. So I think we will be big winners in 2022, but I'm still focusing on 2021. We still have December to go, the whole month, and I hope to generate at least 10%. I believe in the portfolio very strongly, so there's a difference between belief and hope, as Cosmin said. He has a question as well, which I'll cover. And so, the belief in the strategy is there. I know why I review daily the composition and the businesses we have. And so I'm very positive from the UK as well. And you should buy, in general, you should buy when things are red. So now it's a good time to buy. Will it keep going down? So there's obviously the risk of catching a falling knife, right? So the falling market, you try to catch it and then it keeps falling. So obviously it needs to find the support somewhere, but it seems like it's there now and it's going up a little bit, which is good. So I think it's a good time to invest in general. Obviously, those of us who have been fully invested since the beginning of the year perhaps do not have the cash to invest, but if you do have the cash, it's a great moment. Okay, so it's 3 questions from you that you put on the forum. So the first one: would you really, they would really love an update on strategy in the current themes fail. So that's from Diogo from Portugal. So again, I think because we've been beaten down so much, it's unlikely that we will experience much bigger drop. It's already been very, very big, and businesses are trading below their book values. So I do not expect a big drawdown. From the 3 themes, I'm watching China the closest. That's the biggest risk. So that's the biggest risk of this not working out, even though we are trading at 20% of the value of the businesses. But there's a huge geopolitical risk there, so I'm reviewing that. Small caps, highly convinced, underperforming the market this year. I'm convinced it will change, and I'm convinced it will send a lot of those small businesses very, very quickly, very, very much up. And then I will reduce the exposure a bit, but I'm waiting for the whole market to turn back. And UK is probably the safest play of them all. Really good businesses, global businesses, repeatable, scalable. And so I do not think there's risk there. So in all 3, there can still be some drawdown, but I think we are nearing the bottom. Second question from Florin. Okay, we'd like to talk about worst and best case scenario. Okay, massive drop in the market. So the worst case scenario is obviously a big, I don't know, maybe civil unrest because of the forced vaccinations and stuff like this, and then the businesses getting really hit, and then obviously inflation eroding profits or getting loans to be difficult for smaller businesses. These are the risks, the worst case scenarios. And then some of these businesses, if they need, so I always make sure I choose those low debt to liquidity ratio, debt to capital ratio with big liquidity businesses. So most of the small caps actually have no debt. So in terms of those we have in the portfolio, but we want to make sure that there is not a huge impact on the economy because of the virus or because of inflation. and because of potential rise in interest rates, which will make lending more difficult and therefore obviously boring to invest, will also be impacted, and then usually the stock market goes down. So with a big slump, which can come, the markets in the US are still quite expensive if you look at S&P, and if you look at Nasdaq, especially Tesla and tech businesses have been really, really pumped. So if those go down, it is likely that they will take small caps with them. But then again, because the small caps are undervalued, I believe they're almost like a defensive play now, where I think the capital will go from tech to their longer term to have the aversion to the mean. That's what normally would happen in kind of scenario where hedge fund and funds lead the world of investing. Now we have retail kind of leading the world of investing. So everyone buying Tesla, everyone buying Bitcoin has an impact on the price, even if the valuation and fundamentals are not there. It's kind of irrelevant if everyone keeps buying. So obviously the market has changed. I acknowledge that. I actually would like to have someone kind of young and dynamic to help me to find those new trends that maybe I don't invest because I don't know, coming from finance, have the tools that show me it's a bad investment. But maybe we should do more momentum investing. So that's something that I would potentially like to improve in 2022. The best case scenario is where especially small caps go up, China goes up, and UK goes up, all of those undervalued markets. And I believe it's possible to have another 20% month. Some of you are 20% in the minus, so you'll get close to break even, and that would be a great scenario, and I hope it will come in the next 3 months. But if you extend the time horizon to 12, 18 months, that's almost, I wouldn't say certain, but very, very likely that this will happen. We'll have a double-digit growth, and the loss will be erased. Cosmin, he will be happy to hear from you on 2022 and home and recovery plays. We'll finish with that question. So, home versus recovery, obviously we have the new variant, which is spreading quite quickly. So obviously I would like to see Peloton growing, and I believe in that business. We were really massively heard on that business, but I believe in the brand and I believe in the concept, and so I think it's as strong. It's kind of the new Apple for me, and so I'm willing to stay invested. It used to be the biggest position in the portfolio. Now it's not the biggest. We took a lot of profit. Someone commented that they like to mention me to what's a lot of profit. Obviously, I do not know every single number on top of my head. It's very easy to go to portfolio section and check it. So we are 4% on average up on Peloton. It's actually not that a lot because we closed some positions in red, but overall, it's a good business, and I like it. So I believe this will play as a stay at home. We have Blue Apron, who's now 200% up. So I put it at just below 4. Now it's trading at almost 12. It's a great buy. We exited with stop loss in big profit, in 100% profit, some time ago. This is part of the position, but that the remaining is still there, so we're about 200%. It's a good stay-at-home play. I know Cosmin wants me to cover airlines and cruises, stuff like this. I particularly dislike cruises because there's just so crowded traveling every day, and I don't know if COVID situation is allowing for that. I also dislike airlines because it's just not an easy situation for them. So we do have Norwegian, which I feel is the most undervalued, but I like Cine as a play. Cosmin, for instance, as a reopening. So cinemas are open, most people are able to go, box offices confirming that there's big interest in doing so, and the businesses are trading as if they were to go out of business, even though Cine has quite a bit of debt. So I like Cine the most, probably from those kind of obvious reopening plays. And I would prefer to be relatively agnostic to have clear stay at home or clear kind of travel economy. So I would prefer to have kind of Pirelli or Gestamp Automotive or Aston Martin as kind of a little bit of a recovery play. But people are still buying cars. They need to travel, maybe more nationally and regionally now than internationally. So I prefer to have a car. Like personally, I've been using my car more than ever, and I don't use any planes. So there we go. Quite like renewable energy, so we have ton and we may increase that. Quite like medical marijuana, not just for the ticker, that's MJ, but I've been doing a lot of research in that space again, and I just see 27% cumulative annual growth of return. Rate of return, so this is 27% a year, which is great until 2029 or whatnot. So good industry to be in. So I'm looking at those kind of small macro plays. We may buy cocoa, we may hedge, so we'll see. But yeah, for 2022, I would like small caps to really rally, hopefully around January. And then I would like to reduce the exposure to small caps and buy more defensive businesses that are cheap. So let's see, maybe go back to Porsche. It's been beaten down. So I would like to reduce small caps, and China I will monitor very closely and decide whether I want to increase or reduce. So it's difficult to say, but I would like to see what I would like to do is to sell some of the small caps because we have overexposure in the portfolio because they are so cheap. Normally I never have so much small caps, so we would not go as much down. So because I'm convinced, I'm putting more fuel into it, and unfortunately worked against us in the immediate time frame, but hopefully will work for us in the longer time frame. So obviously when we recover on the small caps, our portfolio will bounce back very quickly. So I would reduce some small caps and put them in more like solid businesses like maybe Salesforce or maybe Porsche or maybe some others. And Aston Martin, I remain very, very positive. There's EV element and debt element to it. We have CFO leaving, so we'll see the replacement. I didn't actually like this one that much, so hopefully we'll replace by someone better. So yeah, let's definitely targeting more than 20% up from current levels. So we'll see if this is going to come mainly in 2022 or still in December, and hopefully not much longer. So thanks very much, and if you have any comments, leave them below, and till next time.